Hi, I'm Jim Juback, and welcome to my YouTube video for Wednesday, March 29th. I don't know where you live. Here, I have a number of markers, and they're all sort of pointing towards spring, but very early stages. I take a long walk frequently down by the Hudson River. There's a park, Riverside Park, and then there's a Hudson River walk. And there's this one, I think it's a crabapple tree, but it might be a cherry. It blooms before everything else. And it started blooming a week ago, so we've got beautiful sort of magenta flowers, which means the others can't be far behind, which means spring can't be far behind. So anyway, let's hope. If you like this video, please give it a thumbs up. Subscribe to my YouTube channel. It's free, and that way you get notification when we do the next one, and the next one, and the next one. We're doing about 3 a week. If you want more of my stuff, including 3 portfolios, you can go to my free site. That's jubackpicks.com. If you want 6 portfolios, including volatility and options and ETFs, and options right now are pretty important for hedging this market, you can go to my paid site. That's jubackam.com, and you'll find links to those down below. Okay, today's topic. The complacency is rising again. Let's look at something like the VIX, which is known as the fear index, which tracks the prices that people are willing to pay to hedge the S&P. So when we had the sort of big fear burst about Silicon Valley Bank and then Credit Suisse, the VIX went up to 26.52. That's not a very high level historically, but as you can see from the chart, here's that high. It certainly represents a big zoom. In a normal market, whatever one of those are, you could expect to see VIX at the lows down near 17, maybe a little lower. And at a high, you get a spike up to somewhere in the 30s, maybe even in the 40s. But we didn't get that because we're not getting that kind of fear on the upside. So anyway, so we went up to 26.52 on the 13th. And it's pretty much been downhill since then. Strikingly, the market has decided very quickly that the banking crisis is not really a big problem. And right now, we're down, right now being Tuesday morning, we're down at 2051. Now, last time I did a play on buying the volatility options, I bought calls. I got them down near here when we were 1849. And what you can see is that we had this little low spot there and then a huge spike. What I would like to do is to play this again because I think volatility will spike back up on some event. We're down, getting low. I'd like it to get maybe down there 19, something like that. Okay, that's volatility in stocks. Let me introduce a new volatility index that I've started to follow. This is the ICE Bank of America Merrill Lynch Move Index. It's called MOVE because it originally stood for Merrill Lynch Option Volatility Estimates. And it's known as the VIX of the bond market. It looks at 1 month implied volatility for options on treasuries for the 2, the 5, the 10, and the 30 year. So if we look at that, and I can pull up a chart for that one too, again, you see this huge spike. And you see that it started to come down. It came down a lot, and then we had the Credit Suisse scare, and then we're down again. But you can see that we moved up to the high at 182. We're down at 161 today. But not so long ago, we were down at 129. In fact, the 50-day moving average is down at 129. I'd love to, again, to buy the call options on this somewhere down here again, because I don't think we're done with the banking crisis. We've got the U.S. debt ceiling crisis coming up in May and June. I think we'll get another big spike in this. But anyway, I would like to buy call options on both of those when they get down to this lower level. I'm not buying puts on these because I think this is still very, very volatile up here, and I can't tell what's exactly going on. But if I can get them down here, buy the calls on another climb up, I'd be very happy. So watch this space. I track them in my volatility portfolio, and that's on jubackam.com. So if you like this video, please give it a thumbs up. Subscribe to my YouTube channel. It's free. Free, no money, nothing, just sign up. And that will give you a notification when we're doing the next one. You can also go to my free site, which, as they say, is also free. That's stewbackpicks.com. That has 3 portfolios. Unfortunately, it's a little more basic oriented, so we're not doing options and ETFs in that one. If you want those portfolios, you can go to my subscription site. That's stewbackam.com. You find links to all that down below. Thanks very much for watching.